West Bengal, West Bengal, and I am exporting it from India. So the sale where I am the seller and the buyer is in a foreign country, it's called as export transaction, and the export transaction is not chargeable to sales tax. No tax is on export. That is very good under section 5 of the Central Sales Tax Act. What is very important here, that I may purchase some packaging material or some other things which as it is go with the finished product to the foreign country. That means, say I am manufacturer of the finished product and I am buying the container, the dabba, the packaging packages from X, who is also in West Bengal or maybe some other state. Then what I do, in that packet I just put my own material, sell it, export it from this particular state or from this particular country. I as an exporter, I get the advantage. What is the advantage? Export advantage, no sales taxes. The person who who supplied the packaging material or the goods which I used for filling or using the exportable goods as it is also eligible to get the tax exemption. Okay. That seller or that sale is called as last sale prior to exports. Student, please note down the word last sale prior to export. There is another legal language called as penalty met sale. Penalty met sale, and in a penalty met sale, no taxes would be levied. That means I, direct exporter, no taxes. That gentleman, last seller, before the actual export takes places, no taxes, and in the entire export transaction there is no tax into it. There is one more issue in central sales tax, very important issue. There are certain goods declared by government as national important goods, the goods of importance, and these goods are called declared goods, and the government says this category of goods you should not, you means none of the state government can levy a higher rate of tax. It should be always a lower rate of tax, like on basic rice, pulses, wheat, sugar, handmade paper, and lot many commodities are there in the like coal, charcoal, etc., minerals, where government declared these goods are declared goods, and on the declared goods the rate of taxes should be as minimum as possible and not at a higher rate. It is called as a declared goods. Friends, we come to the last part of today's discussion, is called as service tax. The extremely important as on today's context, because a country where the majority part of the government revenue comes, the fiscal revenue comes, the GDP flow comes from the services, tax on services becomes extremely important. And today, from 2012 onwards, June 2012 onwards, every service, whatever you can see, unless that is mentioned in a negative list, a list where exemptions are given, okay, like basic education, fundamental health services, okay, similar a few category which are exempted, rest everything become taxable. Okay. Big subject, make it to understand the subject. I want to travel from Calcutta to Howrah to Delhi, and I want to buy railway ticket. Okay. If I travel normal class, no service tax. If I travel in a sleeper, means air conditioned class, government says yes, you are enjoying some services, extra services, you pay taxes. So service tax is the limit. All of you, in your mobile bill or in your landline bill or any other service bill, you will find it out the gross bill amount, then added with something, that's something called as service tax or tax on the services. And Union government, the government of India, is the prescribed authority to levy tax on services. Okay. What is the change? A big changes has come from 2012, what I just discussed. The changes is, from 2012, apart from the negative list, anything that comes is called as taxable services, and that taxable services is leviable under the Service Tax Act. Rate of tax is applied at 12.36%. Okay. Some peculiarity into it. What are the peculiarity? A question comes up, who will pay the service tax? Like if you go back the past discussion, central excise, manufacturer will pay, VAT, the shopkeeper or the seller will pay, central sales tax, the person who is selling the goods shall pay. Now the question, service tax, who should pay, who should collect, and who should pay to the government account is a big area of discussion today. Normally, it is a service provider should collect the tax, like BSNL or Airtel, who is providing telecommunication services. In the total bill, they add some amount called as service tax. So Airtel or BSNL collect the taxes from me or you as a customer, deposit the amount to the government account, the chapter is closed and the central government collects the taxes. If it is the other side, means there are few cases where a big confusion or confrontation comes out, where the service receiver, means the person who received the service need to pay the taxes either fully or in part. Give you an example. If it is a transport service provider, commonly called as GTA, transportation of goods, goods transport agencies, there the service provider who is providing the service, transporter, shall become not chargeable to tax. The person who is enjoying the service, that means who is loaded the goods on the truck, shall be leviable to tax. What tax? There are 2 or 3 more categories, like I am a company, my company's name is Unilever Limited. I am hiring a lawyer, and the lawyer is basically what he is doing, providing a legal service. The lawyer is not a company, as an individual lawyer, advocate. I, being the company, Unilever Limited or ITC Limited, I am paying the money, the remuneration to the lawyer. At the same time, I am also paying what is called as service tax to the government account. Our last discussion, we comes out on an issue that is called as, that is known as customs duty. The last point for today's discussion, today's entire discussion. The last point. The customs duty is also indirect tax. Whenever goods are imported in our country, whenever it crosses the customs frontier, means the geographical boundary, there is a customs check post. When the goods come inside, the duty leviable is called customs duty. Repeat. Manufactured, excise duty. Within the state sale, VAT. One state to another state sale, central sales tax. Services called as service tax. And then you import from outside, from other country, is customs duty. And definitely customs duty is payable only when you are importing, and when it is payable, when the goods are just coming in India. Few processes are there, we have to be very careful about the processes. That means once the material has come, you have to assess what is the goods has come, whether it is a chemical or petrochemical or something else. Okay, whether it is a steel rod or it is a silver rod, whether it is a more valuable item or less valuable item, that we have to find it out, and this is called as assessment or appraisement. Then there is a question of valuation, what is the value of that particular product, and then the duty is levied on that. And once the duty is levied, a page is filled out, that page is called as bill of entry, and once the bill of entry is filled up, it's called as the goods are now ready to come out in the domestic tariff area, TTA. So customs duty, goods coming in, appraisement, assessment, valuation, duty payment, release of the goods from the customs area, and that area, that goods comes to domestic area after the customs duty payment is concerned. Students and friends, before we close, one small idea to share, which is the call of tomorrow. In just couple of minutes, call of tomorrow. Now we have seen so many, the plethora of taxes, manufacture excise, sale VAT, interstate sale, central sales tax, service tax, the new conception is coming in our country called as a uniform tax. That means only one taxes. What is that act called? The act is known as Goods and Services Tax. That means one tax which has a combination of excise, that means on manufacture, sales tax or VAT on sale, and service tax on the services, all combined together is called as Goods and Services Tax. And it is all expected that within a very short while, maybe say 2014-15 onwards, goods and service tax shall become fully applicable in our country, and in that case we will have only one taxes in the indirect tax regime. But that is all the story of future, and today we close here itself. Thank you students, thank you friends.